Happy Good Friday to you, folks. Welcome aboard. Matthew Buckley, call sign Wiz, the CEO and founder of Top Gun Options. Want to knock out a quick debrief of the primary model portfolio before we head into this holiday weekend. Interesting week, as we talked about in the live trade brief, and had two great coaching sessions yesterday. One with James last night, and one with Debbie. Folks, if you're interested in Wingman coaching, you can obviously click on the banner on our website, or just give us a call because, like I like to say, Tiger Woods, he's got a swing coach, he's got a putting coach, he's got a sand trap coach. Even the best in the world need coaches, folks. So if you think you're good, we can make you better. You can split up coaching hours between Doug and I, or just me, or just Doug, and it really will accelerate your performance. So I had two great sessions yesterday, 2 full hours where thoroughly went through diagonals and iron condors and really helped Debbie and James out. So thanks for spending the time with me yesterday, Debbie and James. But folks, quick debrief of what happened in the market this week. Well, guess what? Like we talked about earlier in the week, there's 2 sets of job numbers, isn't there? So let's check this one out. ADP jobs. We talked about this, and we talked about what? ADP is there's no .gov here, is a private company. So they reported good job numbers earlier in the week. And I said, warning, Will Robinson. Why? Because guess what? They can be completely off from the government. And the government said today that only 120,000 jobs were created in March. So significantly different than what ADP reported. And obviously, what's that going to do to the futures market? It's going to sink it. The dollar's going to sink. Stock futures are down. Obviously, markets are closed due to Good Friday today, but job growth are below expectations. And I'm going to beat this dead horse until everybody understands this. But now let's go to where the government reports. Here it is right here, BLS, folks, and that's a .gov. And U6 is the real unemployment level, folks. It was, this time last year, was as high as 16.2%. Yeah, we're seeing a nice downward trend, but folks, 14.5% of our population is unemployed. And folks, that's people who are employed but took lesser positions. That CEO, like we talked about, who's working at Starbucks. So take a look at U6, folks, because this official unemployment rate, U3, is what politicians love to use, right? 8.2%, yay, it's getting better. Negative. You got to look at this, folks, and that really has to impact your strategic mindset. Yes, it's getting better, but other than that, Mrs. Lincoln, how was the play? I mean, seriously. So what happened? Let's take a look at our model portfolio. To our model portfolio, and let's actually take a look at what happened this week. Let's take a look at the SPOOs, the SPX, and let's take a look at what happened. Well, as we covered in our live trade brief, let's close our radar down to 5 days here. What happened? Good news out of ADP on unemployment, and then what happened? What happened here? As we talked about in our live trade brief on Wednesday, the FOMC minutes came out. Those are the minutes from the last Fed meeting. And the market said, oh boy, last call, the bartender's pulling that punch bowl liquidity back, and we're going to get a hangover. The bartender, of course, being Helicopter Ben, the Fed chairman Ben Bernanke, whose printing presses are running on overtime. So the market did what? Pulled back on the potential no more quantitative easing, QE3. And if you're just joining us from Mars, QE3, quantitative easing, is just a polite word for putting us more into debt. The bond and futures, the treasuries market actually predicted that the Bernanke was going to raise rates sometime around mid-2013. And the fact that he went on his college speaking tour after his last time he testified in front of Congress and said, no, we're going to keep it easy until 2014, did this. So he testified in front of Congress, as we covered. No, he didn't mention QE3, so the market took that as a bad sign that he didn't even mention it in his testimony. And we had what? We had a nice couple days of a pullback. And then, like Tosh.0, he went on a speaking tour of college campuses and did what? The market steadily went up. And then obviously we saw what happened this week. The new news so to speak, that the Fed was not thinking about any QE3 caused us to pull back. But by the end of the week, and also there were some Spanish issues in here, folks. Quick note about Spain. Spain is not Greece, obviously, duh. But Spain does not have the national debt problems that Greece does. So apples and oranges comparison. Yeah, if Spain has trouble, if they catch a cold, we may end up feeling it over here. But that's also why later in the week we had a little bit of a pullback as well. But what happened? End of the week, the market found some sanity, and the invisible hand of the Fed, or as I like to say, the very visible hand of the Fed, kind of caught us. Yeah, we broke through that. Excuse me. A psychological, level of 1,400 here. But guess what? By the end of the week, we started climbing to turn around here. So let's take a look at our altimeter, our barometer, the VIX, and what that did this week. Obviously, inverse to the SPOOs, the SPX. Had a nice pop in volatility from about 15-ish, up to about 17, almost $18 there. And then it pulled back the rest of the week and settled around 16, just north of, about 16.65 there. So not a huge reaction in vol. And as we talked about, and we're beating the desk here, folks, when vol is cheap, you buy it. When vol is expensive, you sell it. And folks, vol is extremely cheap right now. Like I talked to Debbie and James yesterday in our coaching, we put some positions on that are going to take advantage of this, because you can trade, that's the actual VIX. Want to stay away from that if you don't know what you're doing. The VXX is a good proxy for the VIX. So we put on some good volatility trades. Let's real quickly review some of the positions in and since it's an off day, these disregard the colors, folks, and some of these numbers aren't right. Again, it's a paper train count. The market's closed today, but what did we add this week? We added a gold iron condor. Why? Because gold is usually seen as a what? It begins with the word flight. Flight to safety, right? So as the market pulled back this week, we expected, we being quote unquote the smart people in the markets, expected what to happen with gold. So as the market kind of, hold on, let me bring the radar in a little bit here. As gold, kind of, let me get rid of some of the drawings on here. As the week went on, we expected to see this flight to safety. We expected gold to rise, and what did it do? It did the exact opposite. So what's that tell me? Sometimes you have to use reverse psychology with the market. It's found a support level. And again, this is the strategic mindset behind the gold trade. It's found a support level around, let's call it 157, but part of the Iron Condor we added to the model portfolio was the 155. So we haven't seen that since January, January 10th, folks. So that was our strategic mindset. And guess what? We haven't seen it top out recently, at least in the past month, higher than 165. Last time we saw that was the beginning of March, about a month ago. So we put on a 16-day Iron Condor for April expiration. That is the one, sold the 155 puts, bought the 151s as a bull put spread, and then just added a bear call spread on top of it to make this Iron Condor. We sold the 165, 169 bear call spread. Love this trade. It's going right down the pipe. Good probability of us finishing right between the goalposts there, about 67%. Hey, $1,100 beats a stick in the eye for essentially 2 weeks. ELD, Iron Condor on. Everything else is looking good. Again, we talked about the Goldman Sachs vertical. I know some of you are. I used the Braveheart example. Love that movie. The Braveheart. Hold, because this is an earnings play, and then everything else is just staying the course. We love our long term. We rolled down our April 25 to the 20s as we're not fighting the Fed and we're not fighting the tape. So very happy with what's going on in the model portfolio. Need to put your thinking caps on and let's hit it hard next week. So Matt Buckley, call sign Wiz, on behalf of Top Gun Options, the primary model portfolio, saying happy hunting. Make sure you hedge.